Hey, we are here today to talk to you about your veterans eligibility and hey, you've earned this, right? Like if you're on here today looking for information on your being able to use your VA loan, you've come to the right spot because we have the absolute, and I'm going to tell you, he is the absolute VA construction lending expert on barndominiums in the country. So, with Barndo Bankers, we are trying to bring you the top, not like the second or third team. We're talking about the top, people in the country to bring you answers and solutions to your barndominium questions. And today we have no other than Russ Crews from Edge Home Financing. And he's here to talk to you today about how to use your VA eligibility to get into barndominium. Welcome, Russ. We are so honored and it's such a pleasure to have you here with us.
Thank you so much, John, for having me, man. We've been trying to talk this through for a while now. I'm so happy we finally got it on the books, and just appreciate you having me here and having me on as a guest. And you're definitely too kind of all the stuff you just said.
Well, hey, one of the things I want to share, because like to me, this is a big thing. Like my son-in-law, he's prior military, and our men and women, they put literally their lives on the line for us to benefit our freedoms and to enjoy the liberties that we have. And so our veterans deserve to be in a home when they're ready. And what I love about what you're doing is not only are you specializing to serve, serve our veterans, but you walked in their shoes. So can you share a little bit of your background just so that the folks, when they call up, like you're going to know what an LES is, right? When other lenders are like deer in the headlight, like share just a little bit of your background so they know that, that you're one of their brothers. So.
No, absolutely, man. I couldn't agree more. So a little bit about myself. I've been in the Army for 19 plus years now. I'm still active duty, actually. I've been in the real estate business since 2014, just kind of moonlighting and just dabbling in real estate just because it's a hobby I enjoyed. But yeah, I've served for 19 years, believe it or not. Joined when I was 19 years old. Grew up in Georgia, went to Fort Benning for basic training. I was an infantryman, paratrooper. I've had several different jobs since then. Believe it or not, I was a drill instructor at one time for a couple of years. I was in recruiting for a while. I was a company first sergeant out of Pittsburgh, Pennsylvania, and now I'm at Fort Knox, Kentucky as in the USAREC IG. So lots of different jobs, lots of experiences. I love my veteran community. And I also love that the veteran construction thing in particular is such a niche thing that it's hard to find. And we're going to talk about that in the podcast, of course, some of the things that we, want to dispel with that, using it. But it's like there's so many benefits at our disposal and at our fingertips. And it's just it's so hard to get information out to the masses about what those benefits are and how much it could save you money in the long run and just how powerful they really are. So that's mainly what we're going to talk about here.
Yeah, and that is absolutely that's perfect segue into the conversation because as you and I've discussed, and for our listeners, I've got 31 years of experience. So like I'm one of the old dudes on the block for lending, and even I will in my history I've done VA loans before. But to call myself, to ever have thought to call myself an expert, I'm not even close. And when people would call up, I'd say, no, I can't do construction loans. They're really hard to get. I don't know anybody. They're very difficult. But what I love about the things you're doing, and like you're putting the rubber to the road, but like you're actually executing. Not only are you educating, but you're actually making things happen. And so what we want to talk about, like you said, let's dive into, one of the first things that we should talk about is like people are saying like, hey, or I've heard you can't get a VA construction loan, and you're going to dispel these myths. Like number one, yes, you can. So have at it, explain it.
I mean, that's the number one thing you always hear. And if you're on, the internet or you're in your local community and maybe you're a veteran, even like myself, from my own story, I've bought 4 houses using my VA loan, right? So I've used it multiple times, reinstalled the eligibility several times. I did not know I could have all this time bought a piece of land and built my single family home, even up to a quadplex that's considered residential single family, right? So all this time, I didn't know this was available at my fingertips. Whereas if I did, I would have built several of these instead of buying, older homes, right? So yeah, I mean, the thing about it is just because maybe the lender you're using, or in your local real estate community, your real estate agents, even maybe the mortgage servicer you have right now. There's some top of mind out there that, there's 4 top of mind VA loan operators out there. It's like, Veterans United, USAA,
Right.
We got Navy Fed, et cetera, right? So, those particular institutions do a great job with veterans. I'm not going to say they don't, but what they don't offer is the veteran one-time close construction product. And that is because, as you well know, John, is that construction in general in the lending world is very, very limited already. Like, very few people do it. It's a risky, loan for lenders to do for lots of other reasons. That's another topic for another day. But it's such a small portion of people to actually offer it because of the way it's structured and the riskiness of it, that even smaller offer the VA portion, because it's just something that most carriers don't offer. So that's really it. It's not that they don't exist. You just have to find the right lender that has the right product lines that invest into those communities, right? So that's really the key in finding who does it. Because if you go on the VA website, it's a public website. You can go on there. It'll have the VA guidelines, and everything we're going to talk about today is in those VA guidelines. It's a handbook, right? And it tells you everything you can do. And this is a whole chapter in the VA handbook that you can read yourself online.
Yeah,
so they do exist. You just got to find us, like John, like myself, who do them. So
yeah, well, and to your point, like, I'm going to take, for our listeners, even, add 2 extra layers to that. And not only is it, I don't want to say it is challenging, because heck, I'm in the industry, and you're the first person I found like this that's this specialized, because not only do you have the construction element, but then you add another layer of specialization in barndominiums, right, with rural properties, type of construction. And then you could get a institution, like you could get a company or a lender or bank, credit union, somebody that says, hey, I will do these. But then you've got to have the individuals that can help you navigate that. So I mean, we're talking really high level specialization. And Russ, I am like, that's why I hope everybody can see the excitement that I have, because like literally we've got like this huge golden nugget here with Russ to be able to provide you with some extra special benefit. And this is so exciting to me. So super cool.
You're right, John, too. And I appreciate that as well. And I'm excited to be here because, man, you pump me up with your energy, John. I mean, you really get me going, man. But I would say you're right, because although it's offered at an institution, in the lending industry, you don't get a lot of repetitions of this, right?
Right.
And construction, there's a lot of moving pieces, right? You got the land, you got development of the land, you got the project management, you got to get the architectural designs done, you got to get a builder in, the builder's got to do a lot of stuff. You got to get it appraised. So many moving pieces. It takes a while to come to fruition. It's not a 30-day transaction. It's just not. It takes a lot longer to do, and a lot more variables that you have to think about. So in the lending industry, right, you're like, that's a lot of stuff I'm uncomfortable with. I don't know if I can provide a good service to my person that needs this. I'm not too tuned up on it. It's very rare people come and ask about it. So, the lender may say, I'm just not going to do it because I don't know what I'm doing. And that's totally okay. There's things out there in the lending industry. I have no idea what's going on. You know what I mean? There's so many things to offer clients as a lender and it's a lot of regulatory things that have to happen in sequence. And if you mess one up, you could really blow up a deal for a client. So you really want to be knowledgeable about what you're doing. And that's why I think something like this, construction, but also VA construction, is you have to have somebody who's had a lot of reps at it, or able to teach someone under them have a lot of reps at it, or it's going to be a very difficult process. And that's my feedback for that.
Yep, that's absolutely. And let's get a little deeper in the weeds, because like when we talk about like VA, there's these myths that are out there, right? And I love that you are breaking it down to dispel the myths. Because another one that people talk about are like load limits. They say like, oh well, my VA eligibility on my certificate eligibility only says that it's X amount of dollars times 4, that type of thing. Can you explain kind of for our veterans, so that they don't have to listen to the lender BS jargon? What does that mean to them, like for what they can actually borrow on those certificate of eligibilities?
Yeah, actually, there's even a calculator on the VA website.
Okay, good.
So the VA website says VA loan eligibility calculator. You click on that. And it talks about, county loan limits is kind of like the standards. Like I think right now in the USA is like 766 or something like that. County loan limits for most of the country.
Right. Yep.
It's considered a qualified mortgage. So you take that number and you divide it by what your loan you want to be is versus what you already bought versus what you owe, and it spits out whether you're eligible or not based on the percentage you've already used. Right. So it's hard to talk about without showing you a graph or something, but anybody can go on there and do it. And obviously it's just a little algorithm. But the biggest myth is I can't have two VA loans at the one time, which as long as your eligibility percentage is there versus what you've already spent, which is already on your eligibility done versus what you have left, which is going to be your new loan amount. And it's calculating it based on that 766, range. Then eligibility, you could be 100% eligibility done with zero down still, or it'll calculate what you have surpassed and what you owe into it, if that makes sense.
Yeah, absolutely.
Take you all the way to that zero mark. And then if you go over that mark, then it just tacks on 1, 2, 3, 4, 5%, whatever it is, and it keeps ticking forward. So yeah. I just advise everybody who's in that position, you can go to the VA website. It says VA, mortgage calculator on there, click on it, and it'll have your eligibility percentage broken down. And it'll give you a success or a non-success. So if it gives you a success, you're solid. You can get another one, and you still get 0% down. You can do it again.
Perfect. And again, you guys, we don't want, the process is already hard enough. So the whole part of like the whole concept of Barn Bankers is bringing you the experts. We want you to make it easy. So if you're listening to this and you're like, that's already going over my head, then Russ is going to give you his phone number. Just reach out to him, right? Like you can direct message. He's going to give you your contact number. So we want this to be inspiring and let it be thoughtful versus you having to feel like you got to go through all these steps. So, okay. So talking about that, like, what about land? So, because with construction, you got to buy some land. So another big misconception out there is like, you can't finance land with VA or that you can't have too many acres. And here's people wanting to be out in the rural settings when they want to have, maybe raise some animals, have a garden and stuff, but they would need acreage. So, let's dispel that myth.
Yeah. Another one huge thing is, a VA loan, I can't buy land. I got to buy it from a builder who's offering the land lot as a part of the build. Which is also true. You can do that too, but you can actually take your VA loan. Let's just say you get pre-qualified and you got $500,000, for example. Let's just use $500,000 for this, talk, right? Yep. And in your area, there's empty land lots out there. It can be raw, trees growing everywhere, totally uncleared, no water, no well, no power, no nothing, right? Just raw piece of land. If you're taking your pre-approval and you're like, all right, I got $500K budget, I got to fit in land, I got to fit in the build. I know that the land parcel I want, 5 acres where I'm living, is around $100,000, right? So you can actually portion all of that off and make an offer on land for $100,000. Meanwhile, getting your build, estimated out for you. And now you got $400,000 as your build limit. So what you do is you go out and purchase this land contract, and you get that, settled, and then you kind of combine the two at the end. The thing about land is, though, a lot of folks think that there's a land limit of like 40K or 40 acres. It has to be 50-50 split between the build and the land price. That's all untrue. Those are called overlays that lenders put on it to mitigate risk and kind of filter out their clients. But the VA handbook says it's unlimited land amount. All right. We just did one in Tennessee probably 6 months ago. Veteran came to us. He got 200 plus acres, single family residential, $700,000 worth of land with his VA loan.
Wow.
And we built a barn on top of it for $1.6 million.
Wow.
Right. So and all it has to be, the key thing is it has to be single family residential. You can't be added. You can't parcel it off. You can't sell it, all that stuff. It has to be all in one big parcel, and you can only build one single family home on it. Up to, it's a single family home is considered definition wise between a 1 and a 4 unit residential building.
Yeah. Hey, you
That,
guys, like again, like I hope that if you're listening to Russ, like you're seeing like the possibilities that are out there, because like that is a super huge deal, and there'll be caveats to it. Like when we're talking about these details, there's going to be things like appraisal supporting those things. That, but the whole concept is listening to Russ to know that these things are possible, and what he's talking about with these bank overlays are basically they're extra rules that have been added by lenders from interpretation of guidelines, right? So it's like, here's what VA is saying, but if my bank stepped in and say, well, no, but it's got to be this. Russ is saying, no, take those away and go right to listen to what VA is saying, and that's what he's sharing. So
yeah. And a lot of times, if you're lender savvy, like, and he's connected with the VA network, right? You can go what's called a regional loan center and present the scenario to them that we're talking about now, which is what I did with the big acreage. Because I was like, "Ooh, man, that's a lot of acres, man." It scared me a little bit, right?
Yeah.
So before, I'm trying to advise that client of what he should do. Of course, I've read the VA handbook. I knew what it said, but there's a person at the VA who is like senior, like an appraisal construction person.
Yep.
You can call them just like you can call anybody else. Email them the scenario, and he's like, "You're correct. As long as he's building a single family residential house on it, the appraisal supports it, then thumbs up. We'll approve it. VA will approve it. We will not deny it because it's too many acres." I'm like, golden.
That's
of course,
awesome.
I saved that email just in case things went.
That's right.
Everything went smooth. They should be almost done with that build at this point, actually.
Nice. That's awesome. We're talking about a larger build like that. So just for anyone that might be in that range, you had mentioned, a little prior conversation we had too about $1 million, kind of like that. There's some things that start to change. Once you start getting over those like 766 limits, VA is still eligible, but what are some quick rules and for people to be thinking about, like if they get up in those higher prices?
Right. Good question. So obviously, national county loan limits around 766. Whenever you go over that, it's considered like jumbo or something like that, right? You'll hear that term a lot in the lending industry. With VA, you can still go 0%, 100% loan to value in most cases past that. And it's now not considered really a jumbo. It's considered a high balance VA loan, right?
Okay. Yep.
So you go beyond that. It's still 0% down in most places until you hit the $1 million mark. When you hit the $1 million mark, usually it becomes such a specific loan amount. And you got to think about it, like the higher the loan amount, the higher the risk goes for the lender. So, and that means if we ever have to take the house back for some reason, there's a very finite person who qualifies, which is a very small percentage of the population that will be able to get it. So that's why risk goes up, right? So usually it's around, you start having to put down payment down on that. So it could be 5%, 10%, depends on the lender. Some will still do 0% up to another certain point of 1.5 million. You just have to, those are little overlays that the bankers start putting into place to mitigate risk. But typically it's up to the $1 million mark. You can go 100% loan to value, just like any other normal VA loan.
Wow. Yeah, that's great. Well, we're gonna kind of take the needle from that end to the other end and talk about credit scores for a second.
Right.
Another myth that's out there, and this comes from bank overlays. So I know because I can testify to this. Like our investors for VA loans, we've got minimums like 620 to 640, but you can actually go through VA guidelines and say like 580. So Russ, can you speak to that? Like, what's that look like for veterans? They're being told, hey, you got to have a 680 or a 700 credit score to do a VA construction loan. Right. Let's break that myth for them.
Yeah, 100% spot on again, John. So a lot of this that we're talking about is this overlay stuff that lenders are putting on top of to mitigate and filter clientele, right?
Yep.
But the VA, if you look at the VA guidelines, there's no minimum credit score required for anything. Never says, the VA doesn't say you have to have a minimum credit score for this loan. That doesn't exist. That word will not be found in that VA guidebook, right? However, there are, people have to start somewhere, right? So, and there are, people that struggle with credit, good credit, bad credit, whatever. There is a benchmark, but most people will start above the 600 range and go up, right? So usually 580 is around the starting point for at least for us. Some others will be 600, 620, 640, stuff of that nature. But yeah, there is no real bottom line credit score you have to have. It's all dependent on the scenario, what those boundaries will be. But baseline, in my opinion, the industry is around 580. Anything below that, you're looking at there's some credit things going on there that maybe they won't qualify. The rates will be too high, because the lower the credit score, the higher the rates, the more it's going to cost you for the rate. Not the higher the rate, but the higher the cost of the rate. So those things start playing into factor, but you will not see that word minimum required credit score in the VA guidebook whatsoever.
That's great. No, and again, I appreciate that so much that we're sharing and bringing that to our veterans' attention, because there are times where there are things that have happened and they've got to contend with that, and to not have like that that ceiling put on them gives that flexibility. So just, again, if you're listening to this and you're hearing 580, great, I'm going to get approved for a loan. Remember that, with Russ, I'm sure, Russ, you'll verify you still have to be able to show repayment, that there isn't something there. If you're late on your current house payment, current mortgage, your car payment, and you're defaulted on a bunch of other debt at the moment, that's going to make Russ's job a lot harder to get you approved. So if you take that in consideration, that there are going to be other factors he's going to look at, and not just the score itself, but the actual, the history. So keep that in mind. Yeah.
Great point about credit scores. It's just think of it as if it's your background check on how well you've repaid your creditors in the past. It's your background screen, right? So yeah, you can't have, a bunch of things in forbearance. You can't have missed mortgage payments, a bunch of them, a bunch of things that are delinquent or in collections. All those things are other factors past your credit score. Credit score is the first thing we look at, and then there's a whole bunch of other things we look past that. So 580 is just the background screening, pass. Everything else, we'll see. You know what I mean? So
that's perfect. Hey, here's another big one. And again, I'm drawing off of my own experiences, right? Like, hey, you have to work with a prior approved VA builder in order to go out and get a construction loan. So, and as we're kind of talking about that too, Russ, while you address it, Barndominium community does have a lot of DIYers. So these are folks that may be thinking about, GCing it themselves or doing the whole project. So maybe address that along with, what it looks like to have a builder involved with a VA project.
Sure. Yeah. I get this all the time too. And if you're on the Barndominium Facebook forums, there's tons of them. I know me and John are on there a lot. Trying to provide value to people, but people say, oh, I need a VA approved builder in Georgia, Florida, whatever. You will have to hire a VA approved builder at some point, but it don't have to be pre-approved. So you can hire whatever builder you like. The builder only has to submit 4 forms to the VA to get a VA builder ID. It takes around 5 days, 7-day turnaround, right? They have to agree to the VA, equal opportunity clause about marketing for them. They have to guarantee their work's going to meet minimum property standards for the VA, and then their GC license, just so we make sure they're licensed in the state that they're going to be doing it. 5 to 7 days later, they'll have a VA builder ID approved, and then you have just gotten, your builder is now approved to do your build. So it's not a huge undertaking. It doesn't take months and months and months or anything like that, or even tons of experience. It just has to go through the motions, and the VA actually has a very fast process with this. Believe it or not, I know that's crazy to hear with my veteran family out there. This is like the VA is pretty good. So yes, they're very good at this. Yeah. But also there's a list of VA prior approved VA builders on the VA website. So you go on there, you can look on there, type in your zip code, county, whatever, and a whole list of them with their business name, address, everything's already on there. Unfortunately, it doesn't have emails or phone calls or anything, or phone numbers. I'm sorry. So you have to kind of look them up yourselves into, Google Yellow Pages or whatever. But yeah, I mean, they're right there at your fingertips already.
As part of that, Russ, I'm just going to make a comment to our listeners that they're going through this. So there's a couple of big takeaways with that. Number one, it's awesome for you guys, because I know as a professional in lending, I've heard many times that a builder has to be approved, and Russ is dispelling that. Here's what I want to bring to your attention, though, is because I want you to still be protected. As part of Barndo Bankers, we have resources for you. We will provide you for absolute free guides that will help you with I think our guide is probably 7-8 pages long that takes you through a builder vetting process, because I know firsthand that there are builders out there that will take advantage of people, that especially if you've never built before. There are, and again, the bad part is, like life, I mean, with teachers and police officers and lenders, everybody else, there's 1 or 2% of the population that's bad, and they make it work. They make that bad for all the good guys, right? So if you would like those free resources, you let us know. We'll make sure Russ can get it through, the Barndo Banker Network, or through us directly, so that you have the ability to protect yourself. And then also, Russ has a network of builders himself, so it's okay to ask questions. And hey, Russ, have you had experience with this, these folks before? So don't be afraid to ask questions, or to do your due diligence, because there are people in this industry that, unfortunately, I mean, like every industry, we'll take advantage if the opportunity presents itself. So don't let yourself be in that position. So
absolutely, highly advise always, make sure you're comfortable and do your due diligence with the builders. I know, John, you probably guys do this too, but any new builder we come on, we never done business with before, we do a full-blown background screening on them. I mean, we check they have to have the liability insurance, they have to have a proper GC license, register with the Secretary of State in their state. We look at their last 3 years of builds. They have to supply quite a bit of information for us, and we actually do a full-blown background screening on them to make sure they don't have any court cases pending against them, bankruptcies, all kinds of stuff, that we try to do our best to help our clients figure out whether these people are nefarious or not. But it's still not the end all be all. There's still people that will filter through the cracks. You never know what's going on in somebody's personal life or business that cause issues. So definitely just make sure you're doing your due diligence. We're going to do ours as well before we kick the build off, just to make sure that everybody is protected. Us, you, and even the builder themselves, that we're all legal and good to go.
That is great to hear. That is fantastic. So yeah, great point on doing you guys stepping in. So in some ways, you guys can be the bad guy, which is awesome, right? Like that. So helps protect our folks. So that's fantastic. So well, hey, we've covered a lot of ground. You've got a vast knowledge resource, and I may not even be tapping on. Are there other things you can think of right now that you want to share with the veteran community about construction lending or VA barn construction?
Yeah, absolutely. So a lot of people come to us and say, hey, my lender said I couldn't build a barndominium with them. I can't do unique style homes and stuff like that. Now, the VA gets a bad rap, I think, and people think it's very strict and very rigid, and you can only do this or that. Got to be stick built. Got to be whatever. But it's not true. Okay. So the VA will allow you to do unique style custom homes, right? You can do barndominium, steel frame, all good to go. You can do container homes, even good to go. You can do mobile home, manufactured home. You can do 4-unit properties. You can have and actually all of those also allow what's called an additional dwelling unit, an ADU, up to 1 per property. Wow. So the VA is super flexible. We don't have land limits. So you can, like I said, in my example, 200 acres and up, right? And that's not even the limit. That's just my personal limit. So the VA is very, very flexible. The rates are very flexible. So there's no difference between, purchasing a home with a VA versus building a home with a VA. The rates are the same. It's the same process. It just, it takes a little longer to come to fruition. People ask me a lot too, can I do the work myself? Can I be my own GC and use my VA loan? That, unfortunately, is no. You cannot do that. So in order for you to use your VA loan, you do have to hire a VA approved builder. Now, does a VA builder have to be already approved for you to hire them? That answer is no. That's the myth. All right. So the myth is they don't have to already be, VA approved. We'll get them VA approved. Very easy, simple process. That in a nutshell is most of the things I see online saying, yes, you can, no, you can't. You just got to find the right person with the right experience, the right background. And not saying, even if it's not me, right, just, if it's somebody in the local area, just make sure you're asking them all these questions, review this video. A lot of this stuff is public information in the VA handbook. Very easy read, actually. You know, it's several chapters, but when you find the construction chapter, it's pretty short. So it has all this stuff in there. Another thing just came to mind. Sorry, land. So if you already own the land, right, you can use that as collateral to cover a lot of things that, you know, fees and stuff of that nature that go along with closing a loan. So although you're 0% down payment from the principal loan amount you're asking for, there are fees and stuff like that that are associated with closing a loan, closing costs, right? So if you have land, the equity you have in that deal also rolls over into the deal, right? And it'll create equity enough once we get the appraisal done to kind of finance those fees in, so you don't have to pay any more money out of your pocket and come to closing with any money. That's usually our goal, to make you zero money out of pocket going right into it.
I'm so glad you brought that up, because that is something that a lot of people don't think about, are the closing fees. And speaking of closing fees, you know, with VA loans, typically there's what is called a VA funding fee. And just for clarification, can you confirm, you know, verify for folks what that funding fee looks like? Is it different for construction than a purchase? I mean, what's your funding fee look like for, you know, for VA?
Right. So funding fee is the same. So if you have any percentage of disability whatsoever, any percentage, your VA funding fee is waived.
Great.
Right? And there's a lot of fees actually that the VA will not allow you as a consumer to pay. All right. So hopefully this is not too long-winded, but I'll try to make it.
Never.
In construction loans, you have what's called interest reserve that's set aside for the period of construction. So 12 months, 6 months, 8 months, whatever it is. And you have to pay the interest on that. So let's just say we fund a $500,000 build. We have interest of, let's just say $20,000, right? That interest is set up to be paid by you, the consumer, of the amount of money drawn out of that account any given time during the build. So if it's $50,000, we're paying interest on 50. If it's $100,000, we're paying interest on 100. So it's not total $500,000 of interest. It's interest on the amount that the builder has pulled at any given 30-day period, right? So for FHA and conventional, it's optional to roll that into the financing or not, right? Pay for it as you go. With the VA does not allow you to do that. All right. The builder must cover that in his fees. So the builder has to include that into the contract price, right? So you come with a baseline price, and then we will then tell the builder, hey, you got to cover the interest. So here's the interest, you know, fees for the year. They have to cover the title update at the end. So once you convert raw land into an actual house at the end, it has to be retitled, because now it's, you know, now they're synchronized together as one entity, land and structure, right? Yep. And then at the end, you have to get it resurveyed, because now the survey has changed. Now it has a parcel on it. You have the house on it. There's a road built in, a driveway, all that stuff has to be updated for the survey as well. So those three fees in general have to be covered by the builder, whereas they don't have to be covered in any other loan type other than VA.
Wow. Okay. So I didn't know that. That's actually a really big deal. There, I mean, there's you know, there is I don't want to say a necessarily savings there, but for if you're listening to this, you're going to want to review that with Russ, because that can have a pretty good impact on your pragmatic cash flow during a project. So that's a big deal. So he'll go through the details with you to actually show you, but that's a big deal, folks. If you haven't, you know, if you don't get the concept, call him to ask him about that for the interest reserves. So
yeah, essentially the veteran is not paying anything. Once you close a loan, you don't pay anything on that house until it is completely done.
Yeah.
12 months later, 10 months later, 6 months later, whatever.
I mean, you think about that. If somebody's trying to sell an existing home and they're looking at cash flow, if they qualify, that's a big deal for them from like I said, a pragmatic standpoint of just running a household. So that's a big deal. So that's great to know. Really good info.
In your pocket. Money in your pockets that's our philosophy. We can keep money in your pocket, we're going to do it.
Yeah.
But we have to strategize that. So that's why that experience comes into play. You have to strategize that in advance. When you're doing, before the appraisal ever starts, you have to strategize that and have those numbers already inked out in the contract. So the appraiser is now understanding that, oh, you know, it's not just going to be this baseline number. It's going to be more. So he has to go find comparables that fits that cost differential. If you miss it, that's several $1,000s could be short on your appraisal. It's not a good day to have a short appraisal.
That is huge. Hey, you know what? And gosh, you know, Russ, I always try to keep these to 20 minutes because I know people have got busy lives and they're taking care of families and stuff. And I look at the clock, I'm like, oh man, we've got so much stuff. But so here's another question. You just came up, you know,
Yeah.
VA appraisals. Like I know that especially in the real estate community, there'll be a lot of real estate agents that will say like, oh, VA appraisals are terrible, and you have to get assigned this special appraiser, and you'll never get one approved for construction, or especially a barndominium, which obviously isn't true, because we know you're closing barndominium loans for veterans. Can you address that for folks on the appraisals? That's a misnomer.
Such a misnomer. It's so crazy. The VA doesn't just send a VA appraiser out, or somebody who works for the VA. It's just your local appraiser, your local, dude who does all the appraisals for everything else. He just has a VA designation. He went through some training, and now he can do VA appraisals, right? So he's still using the same measured things, right? He's still using, okay, how many beds, how many baths, what's the square footage, what's your lot size, and he sets out to bring the comparables together for that specific zip code. Now, sometimes with unique properties, you might have to go a little further out to find them. He may not weigh the structure of it, more or less, like, oh, these are all brick or stick built homes, and this one's, steel frame or post frame, whatever. It's a little unique. So he'll calculate up or down based on those characteristics, but mainly the main focus of the characteristics are still what he's using to derive those things. So it's still a cost per square foot, comparable sales approach to the appraisals that is no different from any other kind of appraisal. It is literally the same thing as your FHA, your conventionals, and everything else. It takes the exact same amount of time, and it's the exact same process. He's just making sure that it meets all the VA minimum property standards, right? And trying to find comparable sales to match it. So it has zero significance on the type and everything to do with what the market says. Now, secondary to that is the biggest question people get asked about barndominiums and any unique style home is it marketable? All right. What's the marketability of this if we take this house back and have to sell it? Yeah. Marketability is the biggest key word in that appraisal you're going to see. And the main focus of those is there a appetite for that in the community that we're building it in? Are there other structures like this that may not have sold yet, but do exist that we can use to supplement the appraisal to show, yeah, they haven't been sold yet because it's a newer concept, but they do exist. And here's 5 or 6 examples of that, right? And those will be an addendum to the appraisal saying, yeah, it's marketable. Obviously, there's 5 or 6 of them in the same zip code. Is it marketable? Will the lender's collateral underwriter approve it? Most of the time, the answer is yes, if they allow one.
Yeah, that is fantastic. Well, hey, listen, I don't want to take up more of your time. We've already talked about scheduling future episodes together. Because Russ, you just got a whole wealth of knowledge that I want to make sure our veteran community has access to. So as a function of that, because we're limited time with the YouTube channels and our podcasts and our platforms that we're going to have you on, but people can reach out to you. What's the best way to find you, contact you?
Oh, absolutely. I appreciate it. I'm sorry I went over time too. My bad.
No, I love it. It's like I said, it's so hard to we get going on great topics. I was like, we got to keep going.
So, appreciate you having me on, but my best contact information, my phone number is 931-217-4711. I will tell you, if you call me, I probably won't answer. So please text me first and just say name information that you're trying to get from me, and I'll text you back. Typically I'm on the phone every hour on the hour, like for an hour long thing. You can also find me through email, russ.crews, as it's spelled on the screen here, at edgehomefinance.com, or you can look me up on Facebook, Russ Crews on Facebook. Find me in the Barndo community. I'm in several platforms all across. I'm on Instagram. Look me up, follow me, friend me, hit me up on DMs and stuff, and we'll chat. I mean, I'm all over the place. So yeah, just like John, John's everywhere, man.
And I will testify, Russ does respond back. So and he is super busy, guys. So he is usually about 24 hours. Give him some grace because he is very busy, but he will get back to you. I know in our communications, he's always gotten back to me. But it may take him a little bit of time, so give him a little bit of grace to get back to you, and but he'll be there for you. And he is right. He's on those platforms. I see him answering and serving people all the time inside of those groups and platforms. So Russ, thank you again for being here with us. We so much appreciate you, and look forward to a future episode together again.
Absolutely, can't wait. Appreciate you, John. Thanks for having me, everybody.
All right, bye now.